Have you ever wondered how to grow your money by investing, even if you only have $100? Today, we are talking about ETFs, or exchange traded funds, an easy way for beginners to invest with small amounts. Imagine holding a basket filled with different fruits. Each fruit represents a company. If you buy one share of an S&P 500 ETF, like SPY or VOO, it's like buying this entire basket of 500 companies. You own a little bit of Apple, Amazon, Coca-Cola, and many others all at once. This diversifies your money, so you are not all in on just one company. Diversification means if some fruits, companies go bad, lose value, others might stay fresh, reducing risk. So how do ETFs actually work? An ETF is an investment fund that holds a mix of assets, stocks, bonds, or commodities, and trades like a single stock on an exchange. Its price changes throughout the day as people buy or sell it. Internally, the ETF manager keeps the basket balanced to match an index, like the S&P 500. You never have to pick individual stocks. The ETF does it for you. If you are new to investing, ETFs are an awesome place to start. Why? Here are some key reasons. Let's look at some real ETFs you might hear about. SPDR S&P 500, ticker SPY, the OG S&P 500 ETF. It holds the 500 largest US companies. If you buy SPY, you essentially own a tiny piece of Apple, Microsoft, Google, and 497 other big names. Vanguard S&P 500, or VOO, another S&P 500 tracker just like SPY. Many people choose VOO because it has a super low fee, around 0.03%. You never have to pick individual stocks. The ETF does it for you. iShares Core MSCI Europe, or IEUR. This ETF covers Europe. It seeks to track an index of large, mid, and small cap European equities. Okay, you've got $100. How do you actually use it to buy ETFs? Here are easy steps. Choose a brokerage or app. Open an account with a stock trading platform. In the US, popular ones are Robinhood, Fidelity, Charles Schwab, Vanguard, and M1 Finance. In Europe, you might use Trading 212, DeGiro, eToro, or your local bank's app. Deposit your money. Link your bank and transfer your $100 into the broker. Pick an ETF. Search for ETF ticker like SPY, VOO, or IEUR. Read a bit about it. Check what index it tracks and its expense ratio. Place your order. Enter how much money you want to invest, not just how many shares. For example, invest $100 into VOO. The platform will buy that dollar amount of shares for you, even if it's a fraction of a share. Review and confirm. Make sure everything looks right. Ticker, amount, then confirm the trade. Now you own a share or a slice of a share. Monitor and grow. You can set up recurring buys, say $50 per month, to keep investing over time. This is called dollar cost averaging. It helps smooth out market ups and downs. You don't need to analyze deeply as a beginner. Just pick a broad ETF and invest for the long run. Overall, ETFs are generally seen as a beginner friendly because their advantages outweigh the downsides for most people. Just be aware that all investing carries risk. ETFs are not a guaranteed way to get rich quickly. That's the ETF 101 crash course. Here's your quick checklist to start with $100. Open an account. It's usually free to open. Deposit $100 and buy a diversified ETF like SPY, VOO, or a global stock ETF. Remember to do a tiny bit of research. Read the ETF summary, note its expense ratio, and make sure it matches your goals. Consider subscribing for more beginners finance tips, and always be patient. Long-term investing is a marathon, not a sprint. You've got the basics now, so go ahead and take that first step into the market. Good luck and see you next time.